All right, thank you everyone for coming. We're recording this so others can watch it later. Today's meetup is about the silver squeeze. What's happening in with silver right now? Everybody's taking notes now that the price is running. And so we have some experts here. Well, a expert here. I won't call myself an expert, but we have a expert sitting across the table from me over here, James Morris, and he's going to give us a little bit of a breakdown. I prepared some notes here. Anybody that joins us, you can follow. Looks like Villa joined us. We got Christy on there. So we got a few people. A few others are going to join via YouTube later. So um, I've got 5 key takeaways about our talk that we're going to go over. We're going to try to stay on point as much as possible, get through it. And then James is going to share some of his experiences because he's been in silver since 1937. Just kidding. No.
Let's rock.
Oh, jokes. Since 19 what? Approximately, when did you buy your first?
We started 2001.
2001. Okay, so for 25 years. So he's got some history. He's got some experience. He's been buying the dips. He's been wrong for a very long time, right?
Waiting.
And he's had his tinfoil hat on and his conspiracy theories, and people told him he should have bought the S&P 500, and he was. But now he sits here as an OG, with all the rights to talk and brag and say, "I told you so." But he's not going to do that. He's actually going to be very kind to all of us. And so, without any further ado, these are our guidelines. I will give him a little bit of. We're going to try to stay on point, but I know that you're going to go off point. So go ahead and take it away, and we'll just tell us about what's happening.
Okay. What's happening right now is there is a disconnect from the paper traders and the physical buyers. And this trade now, the banks have agreed now that there's silver squeeze when they short silver in the paper market, that it's becoming too dangerous for these banks to be able to do that. And so they're no longer going to do that. They're going to actually have to, if they're going to do a silver squeeze, they're going to have the silver to back it. And this is a game changer. This is huge. So I'd like to start out by saying what to buy and what not to buy if you're going to buy silver. Do not want to buy.
Yeah, you can hold it up right here if you want to.
Do not want to buy this one. This is an American Silver Eagle.
Up a little bit.
The heraldic eagle.
Okay. Yep.
It's a beautiful coin, but it sells at $16 per spot. What you do want to buy is junk silver. This is a Washington quarter. They refer to it as junk.
Also known as constitutional money.
That's correct. And this is the shield. This is a little bit older one.
Hold it up a little bit more.
Yeah, the standing shield.
There you go. All right.
And they don't have to be pretty. You're only buying silver for its content, not because it's some numismatic, some rare coin.
So numismatic means what now? It means basically a collector item, right? Yeah, rare. In the coin world, it means like it has more value because it's rare, or because it's pretty, or because it's got a president's face on it, or a flying liberty, or yeah.
Here's something else that you do want to buy. This is a 1 ounce, privately minted here in the United States by a very reputable mint.
Put it up by the camera.
But
Here you go.
it's the Walking Liberty. And then this one is a 3 ounce Canadian piece that I paid a whopping $10 for. 3 ounces.
Not today, though.
No, 20 years ago.
Okay, and so you're talking if you're going to buy physical silver, go for the Go for the bullion basically, or the cheaper, the rounds.
Silver rounds.
Or the junk.
And or the junk silver. You can have those in dimes too. You've got the dimes here.
So junk silver is anything that was
1964 and older.
1964 and older. So if you have any of that, that's 90% silver.
Here's the Mercury dime.
1960 and older?
1964 and older.
Here's just
And dimes.
a Roosevelt.
That they will be silver, quarters and dimes of 64 and older.
That's considered junk silver?
That's your
Yeah,
junk silver.
it's silver. 65 and above, they add different metals.
And then what you want to have on
Oh,
you
okay.
at all times.
I see why, that's why junk is mixed with other stuff.
These are a bunch of these tiny rare earth magnets. Very inexpensive. You can go
Exactly.
the Harbor Trade.
Got 10% off.
Place that they
Some other stuff.
online.
Yeah. So they call it junk, but it's not.
Okay, it's just not 100. It's just a pure, it's not true silver kind of thing.
If the magnet.
It's like what the bankers call us as dumb money.
Fixed to it. It's not real.
That's what they call us.
If the
Junk
magnet,
silver, it's not junk.
falls off with gravity really fast, it's not real. But if it does this, acts like it's trying to grab the coin. See that? See how it's grabbing it? Then it's real.
So this paper trade that's been happening, this game that they've been playing between the bankers and the actual COMEX, say the markets that hold the physical. Some are saying that this game has been being played for now 15 years. Is that correct? Since
15 years, but they've been manipulated for longer than that.
longer.
But this silver squeeze is happening in earnest now. And
Right now.
It's happening very quickly because everybody's realizing that this paper trade game is over.
Okay. So some of the notes that I put out here were, I think, go ahead, you can read, and anybody that wants a copy of this, just send me a text. My phone number's right there under my name. And send me a text with your email, and I'll know that you want a copy of this printout. But basically, this squeeze that's taking place right now is this like, would you say this is the beginning of it, the middle of it, the end of it? I mean, if it's taken 15 years for this to play out,
Beginning.
so this is the beginning, like first inning of a 9-inning game kind of happening. All right, so we're kind of giving you guys breaking news. This is not something that you have to like get really anxious about, but at the same time, you definitely want to get a position. That's why I told him to bring some silver, give us some ideas of what to buy or what not to buy, what to steer away from. So you got anything more on this like silver squeeze takeaway? I'll go ahead and scroll down so you guys can see the other points here. There's literally between 100 and 200 ounces of paper silver sold for every 1 ounce of physical silver. So put that into perspective. If these bankers and these institutions are short silver, if the masses and we'll go through some other stuff here, but if the physical demand rises and the papers are sold short, what happens is they have to cover. They have to go out into the market and buy the physical thing to cover their position. And so this is historic. This will go down in history as probably one of the largest, most crazy and volatile short squeezes to ever happen. You got anything to add to this point that we got right here as far as
And what is paper silver again?
So paper silver is a contract that says basically I owe you the real deal in the future if the price goes the opposite direction that I think it's going to go. So they sell it short, meaning that they believe the price is going to go down. So if the price goes down, they make money. If the price goes up, they get screwed and they have to cover their short. They have to go out into the market and buy the real thing and then sell you the real thing.
In itself, there should be no short selling in the stock market.
So you hold the paper and they promise to give you silver for it.
Right.
But
Right.
there's too much paper out there. They don't have enough silver to cover.
Yeah, at historic levels.
Now they've all the banks around the world have agreed that they're not gonna be short selling anymore unless they have that silver to cover it, because they are taking a massive chance of having just all kinds of banks everywhere, just literally implode.
But they're already in the middle of this trade and they're already super short. And we're talking all different big bank names, everything from Bank of America to Deutsche Bank and to all these big banks and hedge funds have been saving and trading these contracts with each other. And now, because silver has already gapped up and ran so much, they're underwater. And what that means is they are um, if they were to close those contracts, they would lose money. And so they're leaving them open for the time being. But as this continues to run, you will find the institutions, the governments, the bankers, and all the people that are on the inside. They're going to try to pull out every single stop in their book and trick in their book to try to stop this from running because there's still so many banks. Remember, 100 to 1 is what's out there. There's a lot of leverage still in the system. And big bankers cannot unwind a trade overnight. It takes them years sometimes to get a position.
Yep.
And so if it took them years, 15 years to manipulate it, and say it took, they're in these positions, these short positions took years to even get, they can't just sell these short positions overnight like you or I can go to your brokerage account and send enter and get your stock or your position. You can't, bankers can't do that. So this is a historic event that's only in the first inning of transpiring of the game.
So everybody looks at me and they say, well, $90 silver, how could I do that? Well,
Right.
they said the same thing to me when silver was $3 an ounce and I was buying 100 ounces at $3 an ounce, 300 bucks. I mean, accumulating is going to take time for most people. But if you're consistent with every week, every paycheck, and you're consistent in buying, if you buy through SD Bullion, Silver Doctor Bullion, one of the cheapest brokers out there for silver, you can order online.
If you're going to buy online, which in this environment, you might be cheaper just going to your dealer.
You could, and that could be true too.
Because
SD Bullion will send it to you completely insured. If you buy more than $200 or $199 or more, it's free shipping, or you have to pay for shipping on it. You don't have to do any of that. And you can find SD Silver Doctors Bullion online.
yeah, SD Bullion's going to be one of your cheapest online dealers. With that point, I would like to also just give business to your local guys, your coin shops, because what's happening is they're basically a market maker. And a market maker is somebody that will buy something at any time. Okay, so they are the silver, the physical silver market maker. And so if somebody comes in with hundreds of ounces of silver, they're supposed to buy them. You know, now they drop it below the spot price so that they can make money on both sides of the trade, right? But if I would, the best thing you could do is call up the local guys and say, hey, do you have any silver at spot? What do you have at spot? And if they say, I don't have anything at spot, but I have something $1 under spot, then write that down, go on SD Bullion and see what you could get it shipped for. If you can make that drive down to the shop and buy it and it's cheaper at your local guy, support him because that's your local market maker and we need to keep them in business.
Plus, not only that, it's a great idea to have a good rapport.
Absolutely.
Which I have with a certain company out of Colorado Springs, Hollenbeck Coins. I've been dealing with him for 20 years.
Mm-hmm.
Nice guy. And he lets me go in and peruse through his
inventory.
Yeah.
So I think it's really important to keep these small guys in business because of this crazy volatility. Like they don't know where to buy it at if it's going to just shoot up like crazy, and they don't know where to sell it at if it's, so they're going to have premiums on both sides of the spot. And don't freak out if it's crazy because I mean if the market went $10 up in a day, Like, he's not going to be able to give you, uh, the deal based upon his inventory. It's really about how much he has. And then on the exit side of things, think about this. These guys, when they have to go turn it in to the mint to melt it back down, they have to sell it $15 back of spot right now,
That's right.
and they're not getting paid for 2 weeks.
That's right.
So let's say they took in too much silver, and now they got to pay their employees and keep the lights on, pay their insurance. They have to sell it for $15 back of spot. That's just what the mints are paying whenever they're shipping out. So,
And if you want to know right to the minute pricing on gold and silver, you need to download the app Coinflation, just like it sounds, Coinflation. Download that app. You can put in dimes, quarters, even the 1942 to 1945 35% war nickels. You can put those in.
they'll tell you what the value is
What the value is for however many you've got.
real time.
Yeah, real time spot price. So you'll know what to try to buy those for and what to try to sell them for.
And that's called.
Or if you're bartering, you've got that app right with you and say, well, silver's at, boom, right here,
Yeah.
right now.
Yeah.
So what do you want to do?
Yeah,
So
that's a really great resource right there, right? So I'm gonna do a quick plug for JJ Silver or Coin Store in Pueblo. I've used him, and I was going to call him actually and see if he had anything at spot or if there was any kind of deals he could give our community. But for any of our local people, that's where I would go because he's honest. Like you say, you got your guy. You're building a relationship with him. Tell him.
got a relationship with JJ too. So.
Yeah. So there you go. Like you wanna build those relationships. What was your question, Brock?
What is at spot exactly now?
That's
When you say
the price of silver right now.
Right?
That's
So
correct.
Okay, right.
So
Right, have this moment with, you
Yeah.
look in coinflation, look up whatever.
The stock market.
So here's the coinflation app, guys.
Right?
Let me,
Yeah, within
On the spot, right then and there, that's what it's at.
within your country
That's what
to
it is.
USD. Yeah.
See that, and there is one dime on there right now, and it's $6.60 for a dime.
All right, let's go ahead and move on to number 2. You guys got it up on your screen right there. You guys probably already read it while we're talking here, but
Add something.
yeah, go for it.
Hey, guys, also, if you have local antique dealers that happen to have setups with people that are selling their silver, these people aren't going in there every day and repricing their silver.
Mm-hmm.
You can go in there and get some killer deals.
Mm-hmm.
On Morgans, on peace dollars, on Kennedy half dollars, on junk quarters, on any, all of those dimes. And that's a great place to go because I just bought a $50 peace dollar and now it's worth $75. So that's a 50% move in the value of that coin.
And I might just throw out there too, just for those that are saying, well, I don't have a whole lot of money right now, but when you're at a thrift store and you see an item that's sterling silver and it's $2, that's probably gonna be a really good trade.
Yeah.
Because sterling silver has what, 72? 92. 92% silver, and anything that says sterling silver on it, if you're looking in the old jewelry and it's a really, it's very inexpensive, a couple bucks, you can do more research. There's tons of videos on YouTube about that strategy. But
always say 925 on sterling silver. One of the two.
mhm.
Yep.
All right, so the next point that I have here for us to look at is based on demand. Why is the prices going up? There's several catalysts that are happening. So number 2 is titled A Perfect Storm of Structural Demand, the new trio plus nuclear. So AI infrastructure, the new price incentive demand. AI focused servers consume 2 to 3 times more silver than traditional like computer equipment. Conductivity is king. Basically, in electronics, silver is the most conductive metal on earth. It can do it. I don't know if you guys know this, but every single breaker in your house has silver contacts. Every single computer, every single cell phone, they're mostly soldered together using silver. A lot of the computer parts are all silver. So that's what we're talking about with the AI. Demand is being driven by the new industrial trio. Solar is one, and the new solar consumes, guess what? 54% more silver. These new TopCon eco cells. Then we have the Green New Deal, right? The EV, getting everybody into electrical vehicles and stuff. Those, guess what? They consume 10 times more silver than a regular automobile.
Breaking news, they just came out with a battery that can be charged in 8 minutes, and it takes a kilo of silver to build that thing. That's 32 point something ounces of silver.
Samsung just invented this battery, right?
Yeah, per battery. So that's going to send silver even farther.
Crazy.
It is crazy.
Yeah, there's so many new like tech revolutions that have recently taken place that are going to demand high amounts of silver for them to work out. So for tech giants building multi-billion-dollar data centers, Bitcoin miners, the cost of silver is negligibly compared to the cost of system failure. So basically, they'll buy it at any price because their industry demands that they need it, right? This makes AI demand price incentives. They will buy silver at almost any price to keep their infrastructure running. The surprise factor, nuclear power and defense. It is an often overlooked driver. So basically in this one, like nuclear power, if AI is the future, we're already quickly headed towards building new and improved nuclear power plants all across the world. And these, ironically, require a whole lot of silver. And that's right there in the notes. The other part that I throw in there is the defense mechanism. Every missile consumes, I don't know the exact number, but it's a large amount of silver. All of these things within the defense world and technology that countries' defense, big play. So that's where AI and the trio in the industrial side of things, where a lot of this demand is coming from. And it's just exceeded, it's exponential demand is what I want to say. It's not going down, it's actually increasing at greater and greater rates and a greater pace of demand coming from the consumer side or the
And the amount of silver that nuclear facilities are going to need is unprecedented. The amount of silver is in the millions of ounces.
Yeah.
Per nuclear facility. And,
crazy.
And when it gets used up or burnt up, which happens a lot, they have to replace it.
Mm-hmm.
And what are they going to replace it at? Are they going to replace it at $90 where it's at now, or are they going to replace it at $1,000? They're buying now because they want to get in, because these companies have to keep buying silver in order to make the product.
Yeah, and we're talking like big companies like Apple, Tesla, Samsung. I mean, your TVs, all of your electrical components, anything, like every single breaker.
Your phones, your whatever. It's in everything.
Yes.
And everything. And it's not just silver. It's all the metals.
All of the metals.
All of the metals are going to go up. Copper has already seen a little explosion. Nickel is starting to go up. Uranium, all the commodities too.
Yeah.
Uranium's going to be huge because it's used in every single nuclear facility. And now all of Europe, Australia are now saying, we need to get away from this wind technology because it's not working. And we need to start opening up nuclear facilities again.
All right, so moving on to the third takeaway that I want you guys to think about. By the way, all this is just information between me and James and how we've done research, and we research this stuff day in and day out. So we're sharing it with you just pro bono, free, but none of it is investment advice, okay? We gotta put that disclaimer in there because yeah, you got to do your own research. You got to invest between your ears to make a wise investment.
And if you want to listen to certain people, there are three people that I just swear by because these guys have been right for the last 25 years that I've been following. And that is Peter Schiff, Schiff, Peter Schiff, Rick Rule, and his last name is spelled Rhule, and then the rebel capitalist, George Gammon. And these guys will give you in short order why it's so important to get into the metals right now. And don't wait on this thing. Don't, it doesn't matter if you've got $100 or you got $200 or you got $50. Get in.
Yeah, get a position and then do, I mean, the non-financial advice here, but like what I do is I get a position in something and then I continue to research it, just a small position, and then as you research it even more and you get more bullish on an asset, then you want to buy in over, dollar cost average. Get some more positions in that asset class. So
Guys, the technicals behind all the metals right now have never been more bullish in my 25 years of buying. And it's coming from every direction. There's just nothing more bullish than the metals markets right now. I've never seen anything like this. And like Nate's saying, this is going to be a historic move. This will be talked about for generations.
yeah.
And it already is. I mean,
and we're just in the beginning. That's where you guys have time. I don't want to this is not mass hysteria, FOMO. We don't want fear of missing out. Don't leverage, use smart leverage, right? Don't go in and do crazy stuff. Research, invest between your ears. And I say it all the time because that is the most valuable asset you have is your brain. So use it, guys, please.
And think of things that you have that are assets that you absolutely don't need and can sell and use that to invest with if you're short on money. There are a lot of ways to do this. I even thought about several things that I've got that I'd like to just offload.
We had a cell phone call this morning about that. We both were going over all the stuff we need to get rid of and that we spent money on, and we probably should just go ahead and dump it into this trade because this is the beginning. It's not the end. Now we'll go over corrections and stuff, and that's I think point number 4. But let's go ahead and get to point number 3, which is the vaults are draining and the exchange inventories are down. So the physical squeeze is measurable in falling inventory levels at major exchanges, signaling a true supply deficit. So basically the number there is 70% since 2020. All of the different exchanges that actually hold physical silver, like in America, we have the COMEX, which stands for the Chicago Mercantile, or CME. Yeah, the CME, Chicago Mercantile Exchange. We also have one in London called the LBMA. There's one in Shanghai. So and these guys have physical metal in vaults, right? Well, they're trading these paper contracts that we were talking about in point number 1, and they're borrowing against what's in the vault. All right. Well, these vaults, and they're borrowing 100 times what's in the vault, 200 times what's in the vault.
They're no longer going to be able to do that because the banks have agreed to not do that anymore, and that is going to cause a silver squeeze like you have never seen. But
in the interim, right now, those contracts are still open, right? And so if you are a big manufacturer, and the reason why they have these is like corn is traded on the COMEX. It's to help the producer and the consumer to keep their prices stable is why these things were invented, right? These contracts to sell between each other. So in the example of corn, the producer, the farmer might want to, buy a contract based upon so that he can sell his corn into the market at a fair price based upon his inputs. And then the person on the other end, say General Mills cereal, they want to buy that contract so that they don't have to pay a exorbitant price if there's like drought or pestilence and the corn doesn't come to market. So that's what happens. But what's the problem with this is right now, um, these vaults are draining. People are taking demand, like Samsung, like Apple, like Tesla. They're wanting the physical silver to be shipped to them. So those vaults are actually deplenishing. They're down 70% since 2020. So that's a major indicator.
And JP Morgan Chase is the largest holder of physical silver. That is a big time red light for everybody. It should be. The biggest buyers of gold and silver are the international banking cartel. They are just buying it up in record amounts, never seen before in history. And they're doing, you always want to follow the money. Follow what these big international bankers are doing. And right now, it's not just the international bankers, but the governments are buying gold and silver.
So the last point right there, I guess I put in here on the notes, was the deficit, the structural deficit of how demand and supply works. So the number that's out there is 800 million ounces since 2019, 7 consecutive years. So basically the last 7 years, the amount of silver coming to market from the mines has continued to grow. The deficit, the amount of silver that's being consumed and being put into these electronics, put into the somebody else's vault, all these different consumers that are consuming silver, there's an 800 million ounce deficit.
And they have to drill down farther and farther every year to get to the same, which costs more money. So that's just another thing.
There's so many catalysts.
So many.
There's a lot of catalysts for this trade. And we're just giving you some data here, some facts, some of our research, and then you take it and run with it, right? Do your own research. Like look up these numbers, take this printout and see how many of these numbers are accurate and see if you can find data to back this stuff up, all right?
Listen to George Gammon, listen to Rick Rule, listen to Peter Schiff. These guys have been doing this for a long, long time, and they've been right. They've been right for so long. And Peter Schiff even went to Congress to beg them to get us back either on a gold standard and or some type of revaluation of gold and silver. And to no avail, of course. But if you think that your government is going to stop overspending, that's not going to happen.
Yeah, or the world. Do you think any government in the world is going to decrease the amount of spending they're going to do?
Japan is 232% debt to GDP. The United States is now 134% debt to GDP. No country has ever come back from that. Once you pass the 100% mark, that currency begins to decline. And that's what we're seeing right now, massive decline.
Like you said, they're criminals.
They're criminals.
The bankers,
They really are.
the exchangers, the layers.
The lawyers, sorry, yeah. Sorry for the layers there. That's supposed to be lawyers, I don't know how to spell.
The layers.
Yeah.
Criminals.
They are, but they're all criminals, and it's the sad reality is ever since we were born, we've been lied to about money.
That's it. And yeah, we can run away with that point because I think it goes, it's in here somewhere where it talks about, what is money? So like paper is not money. Like it's an IOU, it's a promise. It's like another form of the paper silver, right?
And silver, that beautiful piece of silver, has no third-party risk.
It's in your pocket.
It's in your pocket.
Yeah.
You don't have to go to a bank to beg for it. You don't have to. Little story for you guys. When I actually read the Constitution and I found out we're not following it, especially when it comes up to our money, I went and closed out my 401k. I didn't have much. It's $16,000. And I went and bought gold and silver with it. took it out of my bank, and we bought gold and silver with it.
That was around 99
Yeah. This
or
is
2001.
Yeah, 2000.
Okay.
This was a U.S. bank, big bank. And so I take a loan the following day after I bought my gold and silver and took it down to Dallas to have a preventative maintenance done on my truck and trailer. And when I got there, I went to go buy a pizza. Well, I was informed that my bank account has been frozen. Frozen. And that they needed to know what I did with my money.
Yeah.
My money.
Right.
Wow.
Yeah.
That was wake up call for me 101. And so he finally drug it out of me, so he reopened my account up. Needless to say, I was never banked with U.S. Bank again. And I highly suggest that
But the takeaway is the referee can change the rules.
yeah.
Yes. Yeah, number 4 is the Empire Strikes Back, regulatory risk and margin hikes. So, the CME group, which is our local, where we keep all of the physical silver that backs the paper silver, right? In Chicago Mercantile Exchange. So where that's at is in Chicago, and remember 70% less is in there now since 2020. Well, in order to protect their buddies, right, the people that have the shorts open, they have changed the rules 4 times in the last 42 days. And
That's unprecedented.
within 42 days, not in the last 42 days. The last change was what, a week and a half ago? Yeah, we've been keeping up on this, so it's been crazy since.
Something really important about this. Before, when they would do these margin calls, and all they're doing is increasing what you have to either buy or
The amount of cash you have to have set on the side to have this contract still open.
And what happens when they do that margin call, these guys have to sell a bunch of their silver right away.
The small guys.
Yeah, the small guys, in order to cover that damage, that new margin call.
Yeah.
So when they do that new margin call, it abruptly brings silver down. Now, in the past, it would cost silver to stay down for sometimes
years. Yeah.
Now, 1 or 2 days, and silver's shooting right back up. So their margin calls aren't working.
They're not working.
Because everybody's figuring out that this paper silver squeeze is
criminals.
Yes.
These guys are criminals, and they're all in a club, and we're not invited, guys.
That's right.
And so I guess the warning here is be prepared for flash crashes. If you see the spot price and the price on the computer screen go down, do not panic sell. It's going to get bought back up. You could buy at the top, and then it could be the bottom again, or so-called, the short term. It's way down. You lost $10 per ounce on silver, or whatever it might be for that day or that week, but it's going to get bought up because these other underlining factors are not going away. They're not going away with rule changes and shenanigans that the criminals are going to be playing. So just be aware of that. There will be violent paper price volatility. So, I guess the takeaway is the squeeze will not be a straight line up. Expect volatility orchestrated by exchanges and regulators to protect their buddies. All right?
Remember, it was we, the taxpayer, that bailed out all these bankers out in 2008 to the tune of $6 trillion.
Yep.
Why are American taxpayers having to come up with money that a private bank created? In 1802, Thomas Jefferson called a private central bank more dangerous to our republic than a standing army. He got rid of the first private bank of the United States. In 1836, they tried it again with Jackson. Jackson got rid of the second private bank in the United States. They waited all the way until 1913, and they got the 16th Amendment passed, and now they can just go ahead and just start printing all this money, and you, the taxpayer, have to flip the bill for it. You get to pay the interest on the debt every year with your tax money, every single year. And it is just, they're, like I said, they're criminals. These people are criminals.
The last point that I have here, number 5, is I saved this for last because I think this is the biggest warning, or this is the most important point in the whole conversation, because it affects the money that we use. It affects the US dollar. If you're in the US right now and you're watching this or listening to this, this is why I'm concerned. This is going to be a massive transfer of wealth from one group of people to another group of people. And the reason why is because of what I'm going to explain in this point right here. So what has happened is all the central bankers have an agreement upon what they consider as money. And we've been operating in America as the world reserve currency. What that means is banks across the world, central banks across the world, in order to keep their currency relevant, they hold our debt, our bonds, on their balance sheets. And it was considered pristine capital. It was one of the best forms of capital. And in fact, until more recently, when this Basel III Accord international regulatory accord happened and they agreed upon it, before this event took place, gold was a tier 3 status, meaning it was junk. They didn't hold very much of it on their balance sheets.
It was things of the dinosaur days.
Well, everybody was holding US debt. Well, they just changed the rules, okay? You weren't told about this on Fox News. You were not told about this on CNN. They have to unwind this dollar debt situation and switch to real money.
And so our private central bank, called the Federal Reserve, is now going to be buying our own bonds.
Our own debt.
Our own debt, which is called monetizing the debt.
Refinancing your credit cards with more credit cards.
Yes.
You can. It's called refinancing your credit cards with more credit cards.
So the government of the United States can overborrow, but you can't do that. As Brett says, you can't do that.
Well, they're not just borrowing.
If you take too much money out of your bank account, you could be facing jail time. That's called bank fraud.
So the big takeaway, I think, that I would really like people to get, we operate in dollars, and dollars is what we pay our bills with. The dollar is going to become less valuable. That's called inflation. While at the same time, the central bankers of the world and all the smart money is going to be running towards gold and silver at a sprint pace. So this is where the big takeaway is. If you save your wealth in dollars, if your ruler, your measuring stick is in dollars, you're going to lose. You gotta switch to gold and silver and start thinking in terms of how much is that going to cost me in silver? How much is this going to cost me in silver? And if you have any kind of a savings account that has assets, you better get something that's real, because the dollar is going to go up. I'm talking not in value. Inflation is going to go up, which means the dollar goes down. So that means instead of $5 a gallon gas, it's $10 a gallon gas. Instead of $3 for eggs, it's $6 for eggs. And that might be in 1 year. It could very easily go very fast in the wrong direction with this dollar. It really depends upon how fast the rest of the world dumps their bonds into our market.
You got to remember that
I'll take your question.
This 6 ounces of coins that I showed you earlier, guys, the 4 separate pieces here, one's a 3 ounce and the other are 3 1 ounces. I purchased those for $40, all of them together. They're now well over 600.
Yeah.
And I know a lot of people are thinking in their heads, silver's $90-something. What are you gonna say when silver's $1,000? And
Yep.
10 times, almost 11 times your money.
We'll say, gosh, we bought way back when.
Yeah,
it was
we
90.
bought way back when. it was
We bought
90.
when it was 90, exactly. You're gonna have the same story that this man has.
So at what point in this Ponzi scheme do we stop using the term dollar as the value of silver?
I don't think that's.
Because there's no relevancy.
Right.
You know, if that at some point becomes a moot point when it starts to, the paper goes so far down that a silver ounce is like $2,000.
Okay, let's say
It
this.
has no
Let's say this right now.
real, you know what I
This,
mean?
this,
It becomes irrelevant at some point.
right. Yeah,
Well, it should become irrelevant in your mind, but like there will still be people that want the government to bail them out.
Well, yeah, but
And
that's
so
what I'm
they will
saying.
pay the $20 a gallon for gas.
This 1-ounce silver round purchased the exact same thing 25 years ago when I bought it, that it will purchase today. It holds its value. Nothing else holds its value but real money.
In fact, it's created, like you have gotten everything in the price of silver has gone down.
Right.
In relative terms, in purchasing power.
Right. Everything up against it.
Up against the silver. Yeah.
Right.
Now in dollar terms, everything has gone up.
Right.
But as far as purchasing power
Power,
with the silver,
it has not.
it's still at historic lows compared to 1971.
Right.
When silver was our last ginormous move up in silver in relative terms. And I would like to show you guys on the chart here in a minute. But what on that
Oh, I
point?
was gonna ask you, what is, the Basel III? What is that?
So it's an international regulatory agreement between all of the central banks of the world.
And when did that take place?
So it's an agreement that they have that's continued, and this 3 number is the most recent like iteration of it, where they not quite a week ago. It's been a little longer than that. Yeah, but it's basically the rules that they set up for each other.
A long time ago.
No, this is ongoing.
This is the most recent one. That's why they're calling this one Basel.
Well, what I'm saying is the first Basel one
Yeah.
happened a long
This
time
is
ago.
what we're saying.
So they keep
Updating and-
updating and changing the rules
Right.
Yeah.
to fit their needs.
Yes.
Yeah.
Okay.
That's what needs for sure.
No, yeah.
And they're not going to tell you about this. This is not stuff that the local news is telling the
No.
masses. Because in fact, not most, I would say a few of the central banks have incorporated these new rules immediately. India's one of them. Russia's one of them. Not Europe, not US, not China. They're not doing it because they're the ones with the most amount of US dollars, not Japan. They're definitely not doing it. So they're the ones that hold the most amount of debt. The ones that have the paper, remember the saying, don't get caught with holding the bag. Do you know what that means?
The
You know-
paper bag.
The paper bag. Well, it goes back to the medieval times. And there was scammers out there. Have you ever heard never buy a pig in a poke? So a pig in a poke is a pig in a bag. And so,
Okay.
you want to see the pig, right?
Right, okay.
So there was people that were selling like not a pig, but they would be like people going around in the medieval times selling their pig in a bag,
Mhm.
right? But then they would like, well, let me see the bag. Let me look in the bag. Well, there would be a dog in there or a cat instead of a pig. And so they got screwed. And so the sayings go back to never buy a pig in a poke and don't be the guy holding the bag.
And here's something else, guys.
So just let me finish this point real quick. The the central banks that are holding the cat in a bag are Japan, the US, and China,
They're holding the bag.
and Europe.
And now the Japan is the biggest buyer, or they used to be China. Now it's Japan because China's selling off. Japan's going to follow. They're going to sell off too. I want to show you guys this. On the sides, there's a reason why they do these reeded edges on the sides of silver. And the reason they do those reeded edges is because in the old days, you'd have this scammer that would shave the sides off and he'd take one and make it not obvious. And then he would set that coin down, he'd pick up another one and he'd shave that off, and then he'd melt it all down and he'd eventually have an ounce of silver.
Coin clipping, they call it.
Yeah, coin clipping, and that's why they put reeded edges on them, so if you see those reeded edges are gone, you don't buy it.
There's a reason.
Well, it's a security move then, right?
Yeah, that was a security, exactly.
Smart security move.
And the same way that that story transpired right there, that's how the government, prior to 1964 to now, they're coin clipping us. They quit putting real money in our coins.
Right.
They quit backing the dollar with gold.
Right.
They coin clipped America, and America is holding the bag. Our citizens are. And so I guess we could wrap this up, but yeah, the basic takeaway here is gold and silver is real money. It's been for all time. Central banks are now increasingly accumulating gold. And even in the case of India, they're actually backing their bonds with physical silver. This is all new to hedge against geopolitical fragmentation. Silver is no longer just a commodity. Yeah, we went through all that. It is a commodity. It's a huge commodity. It is a strategic asset being hoarded by nations, making the physical supply even harder to secure. Here's the takeaway, guys. Central banks are beginning to reposition away from debt, paper, the US dollar, and are buying gold as a strategic asset, providing a new floor. This is the new bottom, guys. $90, $100, $4,500 for gold. That's the new floor. Excuse me. For its long-term valuation. So silver moves when gold moves. Basically, they move not perfectly, but they move together. Real money moves together because of the value and the correlations and the ratios. So the last point, with global stockpiles at their low levels, is at the lowest levels in decades, silver is now a geopolitical chess piece. And this is just the beginning of a very long and played out game. So you guys are getting the news right here. Today is January 21st, 2026. You heard it right here.
And last year, it was actually December 24th. I looked at my wife and I said, silver's gonna hit $75 next year. And damn if it didn't. She hit 76.
I
So,
thought gold,
and
I predicted gold would be at 4,000 by the end of the year.
Uh-huh.
4,800.
40.
I'm like,
And that was for this year or last year?
this year, it's at 4,800 for gold.
Yeah, I predict gold will be at 10,000 by next year.
it could be.
So your
That's not exaggerating.
your statement of takeaway, central banks are beginning to reposition away from debt, which is ironic because the central banks are the ones who created the debt system
Yes.
to begin with.
But here we go. The
Well, yeah, but
government writes the bill. The private Federal Reserve prints the money.
Mm-hmm.
But excuse me, I hate saying that because it's not money. Prints the currency,
Yep.
and then you, as a taxpayer, get to pay the interest on that debt. We don't even pay down the debt. We just pay the interest on it.
well,
And if interest rates,
Through inflation,
through inflation, and
through
if
the cost of
and
goods
if
going
they
up.
tried to raise interest rates like they did back in the 1970s. Remember, in the 1970s, we only had a couple of $100 billion in debt.
Yeah.
Now we're 38 trillion. We raised interest rates up to 17 point something percent back then to fight inflation. If we did that 17% today, you're talking $12 trillion, and the American people don't have it. That would be $12 trillion in interest payments we'd have to pay back. We can't do that.
Yeah.
We just can't. It's the money's
well, my
there.
point was that between the government and the central banks, it was orchestrated as a debt system to begin with.
To screw us.
And
Like I said
then
last
to turn around and say, well, now we're going to reposition ourselves because we're going to be a good guy.
Yeah.
It's bullshit.
It's worse than just like the taxes and what people pay in taxes and how we're a serfdom compared to the medieval times when they were considered serfs, I think, once you paid more than 40% in taxes. And we're at, if you live in California, it's higher than that,
Oh,
okay?
Yeah, yeah.
But that's just taking the income tax and those metrics, right? On the debt and on the shenanigans and the lies and the corruption based upon this monetary system and how they extract wealth out of us, it's easily in the 90s and 100% of serfdom.
I refuse to even
If you-
drive to California because their diesel's anywhere between $7 and $8 a gallon.
You'll lose on that trade.
Oh,
Yeah.
I don't even drive it.
So if you have any questions, my phone number's there. Send me a text. If you'd like the copy, send me a text with your email and I'll get you a copy of this. Otherwise, thank you for tuning in today. And anybody here have questions, we can talk more, but I'm gonna go ahead and end the reporting here.
Oh, you got one of those magnets? I don't know how to,
You need some?
yeah, I don't know how to give it to one the day before. I thought I stuck it somewhere safe, but
Take a
then
few of them.